Imagine you're the captain of a supertanker. You're out in the middle of the ocean, you're carrying thousands of tons of heavy cargo, moving at full speed.
Right.
And then suddenly you realize the port you were heading to, well, it's just not profitable anymore. You have to turn this massive ship around.
And anyone who knows a thing or two about physics knows turning a supertanker isn't like turning a speedboat.
Not at all.
It takes time, it burns just a massive amount of fuel, and the stress on the hull is immense.
That is the perfect picture of the company we're looking at today. We're talking about Arena Bilgisayar.
The engine room.
Exactly, the engine room of the Turkish technology sector. The guys who move laptops and phones from the port to the store. But right now, they're trying to execute that massive U-turn in some very, very rough waters.
And we're looking at their 9-month interim report from April to December 2025. It's a perfect case study in friction, the friction of changing a business model while inflation is just chewing away at the hull.
Welcome.
Glad to be here.
So let's first get to know the company a little, because I think while almost everyone owns a device that probably passed through their warehouse, the name Arena kind of stays in the background. Who are they?
Well, they're one of the patriarchs of the Turkish IT market, founded way back in 1991.
Wow.
They are essentially the bridge between the global tech giants and the Turkish consumer. They don't have factories, no smokestacks. They have warehouses, massive, massive logistical capabilities.
And I saw they've been physically moving recently, too. There's a note about their headquarters.
Yeah, that's a brand new development. For years, they were in Eyüp Sultan, but as of January 26, 2026, they've officially registered their new headquarters in Kazakh, Istanbul.
Yeah.
They also keep a branch in Ankara. It's all part of this broader push to modernize.
So they're movers of goods, but they aren't just one single company. When I looked at the corporate structure, it looks a bit like an octopus.
It is. They have Arena International SCD in the UAE for global trade.
Right.
They've got Paynet in Cyprus doing fintech and payments. There's Arena Mobile. And then there's the subsidiary that's causing all the buzz and maybe some of the skepticism, Arena Labs. That's their AI and technology arm.
Okay, we are definitely going to drill down into Arena Labs later because that seems to be the new destination for our supertanker. But first, who's actually steering this ship? I mean, who owns Arena?
It's not just local capital. The controlling stake, about 49.4%, is held by Reddington India Limited.
Reddington.
Yeah, and they're a supply chain monster on the global stage. The other 50.60% is publicly traded, so you have Turkish management on the ground, but the strategic oversight has a very strong link to India and the global markets.
I was looking at the board of directors list.
Yeah.
We've got 5 members listed. Keith, William Frederick Bradley, Kunet Gens, Krishnan Srinivasan Venkata, Baruch Duzanulu, and Sirkan Shelik.
It's a mix of international and local experience,
It is, but I noticed something else. Looking closely at those names, currently, there are 0 female board members.
That is correct. In an era where corporate governance scores often, weigh gender diversity pretty heavily, their board is currently 100% male.
And speaking of the people side of things, this is where I kind of got stuck reading the report. I looked at the employee numbers, and then I looked at executive pay. The optics seemed complicated.
You noticed the headcount reduction.
I did. The report says the total headcount is now roughly 198 people. And if you look at other employees, that number dropped from 279 down to 192. That's a huge slice of the workforce gone, almost 30%.
It is. That's the restructuring we're talking about. They're slimming down the traditional distribution workforce.
Right. But here's the thing. They let go of nearly 30% of the staff, presumably to save costs. But then I see that top management and board members were paid about 72.8 million TL in this 9-month period. That is up from 57.8 million TL the previous year.
It's a very sharp contrast.
It's more than a contrast. It's a 15 million lira raise for the captains, while a third of the crew gets thrown overboard.
Sure.
I mean, how do you justify that to shareholders?
It's difficult. The corporate argument would probably be that, navigating this U-turn toward AI requires retaining top-tier leadership talent, and that costs money.
I guess.
But from a morale standpoint and an operational one, increasing executive compensation by that much while slashing headcount is always going to raise eyebrows. It suggests the burden of this whole transition is falling on the rank and file.
It definitely sets a tone. So before we get into the financial wreckage, and there's let's do a quick SWOT analysis.
Sure. Strengths. They have scale. I mean,
Yeah.
25 billion TL in revenue is no joke. They have Reddington backing them, and their logistics network is solid.
Okay, weaknesses.
Margins. They are razor thin. We are talking about a business that keeps pennies on the dollar, and as we'll see, they are currently losing money.
And opportunities.
The pivot. Arena Labs, moving from low-margin hardware to high-margin AI and robotics.
And the threats.
Macroeconomics. They're incredibly sensitive to currency exchange rates, and the inflation accounting in Turkey is making their historical data look, well, very volatile.
Okay, so a bloated ship trying to slim down, changing course, and sailing through a hurricane of inflation. Now we can move on to our analysis of the financials.
Let's crack open that income statement.
Just a quick reminder for everyone, this is a 9-month interim report for April to December 2025. And we have to talk about the lens we're viewing this through, TMS 29.
Inflation accounting. This is absolutely crucial. In a high inflation environment like Turkey, you can't just compare last year's lira to this year's lira. They aren't the same.
Right.
TMS 29 forces companies to adjust past numbers to today's purchasing power.
I love the shrinking ruler analogy for this.
It's really the best way to visualize it.
Yeah.
Imagine you're measuring a kid's height, but every month your ruler gets 5% smaller. At the end of the year, the kid measures taller, but they might be the exact same height in reality. TMS 29 tries to fix the ruler.
So using that fixed ruler, let's look at revenue. Sales. In Turkish lira, they brought in 25.76 billion TL.
Which is a slight increase, about 3.06%, compared to the adjusted number from the previous period. So in lira terms, they are technically growing.
But wait, when I turned the page to the currency breakdown, my optimism just vanished. In US dollars, the picture's completely different.
This is the reality check. In USD terms, their revenue actually dropped.
By how much?
Nearly 15%. It fell from about $747 million down to $635 million.
So are they growing or are they shrinking?
In real global purchasing power terms, they're shrinking. The ruler, the lira, shrank faster than they could grow sales. This is the danger of only looking at that TL headline number.
Okay, let's go down the ladder. Gross profit. They sold 25.76 billion TL worth of goods. What did they actually keep?
About 1.38 billion TL,
I ran the calculator on that. That's a gross profit margin of 5.36%.
which is actually a tiny, tiny bit up from 5.29% last year.
I know you say it's up, but 5%. For every 100 lira of product they sell, they keep 5 lira and 30 kurush. That leaves almost no room for error.
That is the distribution game. High volume, low margin. You're just a pipeline. But you're right. It leaves very little room to pay for overheads, and that is where Arena really hit a wall this period.
Operational expenses.
General admin and marketing specifically. They jumped to roughly 1.19 billion TL.
So they made 1.38 billion in gross profit and then spent 1.19 billion just to keep the lights on and run ads.
Exactly. Which leaves an operating profit margin of just 0.30%.
0.3, not 3. 0.3. They're basically breaking even on operations.
And that's before we even talk about finance costs. Once you add in the cost of debt, inflation adjustments, the whole floor just falls out.
The bottom line.
A net loss of 924.7 million TL.
Wow. Nearly $1 billion lira loss.
Yep. And compare that to the previous period where the loss was around 280 million. The hole is getting 3 times deeper. The net profit margin is now negative 3.59%.
So for every 100 lira they sell, they're losing 3.5 lira. That sounds sustainable.
For about 5 minutes, yeah.
But this is where the report gets weird. I'm looking at this massive loss. I'm expecting them to be out of cash. But I look at the balance sheet, and their cash position doubled.
It's the big anomaly of the report. Cash equivalents jumped from 434 million TL to over 1 billion TL. 1.085 billion to be exact.
How do you lose almost $1 billion on the P&L but gain 600 million in the bank?
Well, 2 things. One is aggressive working capital management, but the big one is an asset sale. This brings us right back to the strategy.
This Datagate deal.
Right. In the footnotes, they detail the sale of their Vodafone contract business, which was under Arena Connect. They sold it to Datagate for $8 million plus VAT.
Okay, hold on. They sold a contract with Vodafone. That seems like a steady, reliable income stream. Why would you sell the safe part of your business when you're losing money?
Because that safe part is the low margin part. Management was very clear about this. They said, we are selling this business to fund our investments in robotics, automation, and AI.
So they're burning the furniture to heat the house.
Russ,
Or is it more strategic than that?
they would say they're selling the old diesel engine to buy a nuclear reactor. They're betting that $8 million is better spent building Arena Labs than it is moving SIM cards for Vodafone.
It's a huge gamble, though. I mean, $8 million isn't actually that much money in the world of high-end AI development.
It isn't. But for a Turkish company looking to pivot, it's seed capital. It also explains why their phone segment revenue dropped 15%. They are intentionally walking away from that volume.
Let's talk about how they're funding the rest of this operation. The debt.
It's high. Short-term bank loans are sitting at 3.95 billion TL.
Ouch.
The good news, if you can call it that, is because of that huge cash pile, their net financial liabilities actually went down from about 3.5 billion to 2.7 billion.
So the net debt looks better.
On paper, yes, but the structure is fragile. Bank credits and trade payables make up 76% of their total resources.
So for every 4 lira in the company, 3 lira belongs to a bank or a supplier.
Correct. And look at the shareholders' equity. It dropped from 3.17 billion TL down to 2.24 billion. Equity now represents only 18% of total assets.
That is getting dangerously thin. That means there's just not a massive buffer if things go wrong.
Precisely.
Any other little surprises buried in the footnotes?
Well, there is one little lifesaver. Tax.
They paid a lot.
No, the opposite. They recorded a deferred tax income. It wasn't an expense. It was a gain on paper.
Yeah.
This actually reduced their net loss. Without it, the loss would have been over 1 billion TL. Easy.
And what about currency risk?
They're playing a specific game. The report shows they are long on the US dollar. So if the lira crashes against the dollar, they actually make money on the exchange. But they're sensitive to the euro. It's all there in a table. They are essentially trading currency as much as they are trading computers.
Okay, so let's zoom out. We've got a company selling off its safe bets, taking a massive loss, but sitting on a pile of cash. What's the future outlook here?
Management is telling a story of total transformation. The core story is, we are done being just a box mover. They know that 5% gross margin is a death sentence in the long run. They want to be a service provider. They want Paynet to be a fintech giant, Arena Labs to be an AI leader.
So back to our supertanker. They're turning the wheel, but the financial loss we're seeing, that 924 million TL loss, that's the sound of the hull creaking under the stress of the turn.
That is the cost of fuel. And the risk, of course, is that they run out of fuel before the turn is complete.
Or that the crew mutinies because the captain got a raise while they got fired.
That too.
You know, before we wrap this up, if you are enjoying this deep dive into the messy reality of corporate financials, please do hit that like button. It helps us a huge amount.
And make sure you subscribe. We're going to be tracking more of these companies as these inflation accounting reports come out, and you really don't want to miss it.
And if you want to support our channel's ongoing production and keep us independent so we can point out things like this, please consider the membership options. Or you can just drop a super thanks on the video.
So, to summarize,
Arena Bilgisayar, a giant in transition. Revenue of 25 billion TL, but shrinking in real dollar terms. 1 billion lira in cash, but bleeding nearly 1 billion in losses.
and a management team that is betting everything on a pivot to AI and robotics, funded by selling off their legacy telecom business.
So, for the retail investor listening to this, why should they care? What's the takeaway?
It is a binary bet. If you look at this balance sheet today, it's scary. The equity is eroding, the losses are widening. If you're risk averse, you probably stay away.
Yeah.
But if you believe that Arena Labs can actually pull this off, if you believe they can transform from a logistics truck into a high-tech AI consultancy, then you might see the current stock price as a discount on a future tech giant.
It's a trust me stock.
It really is.
Which brings us to our final thought to leave you with. Management is selling the old world to buy the new world. But Arena is, at its heart, a logistics company. They move boxes. The question is, do you trust a company built on warehouses and trucks to reinvent itself as an AI leader before the low margins eat them alive?
That is the billion lira gamble.
Thanks for listening, everyone.
See you next time.